On March 19, 1997, a geologist named Michael de Guzman boarded a helicopter over the jungles of East Kalimantan. He never landed. 6 weeks later, 6 billion Canadian dollars disappeared with him. The paper trail exists. Most people never followed it. David Walsh founded a mining company from his basement in Calgary in 1989. It wasn't his first attempt at prospecting, and it wasn't going well either. He had already gone bankrupt once in 1991 after years of failed diamond exploration in Canada's Northwest Territories. His car was repossessed. His family's finances were in ruins. Walsh needed a new story, and he needed it to work this time. He found his story in gold, and in a partnership with a man whose name still carried weight in the mining world. John Felderhoff was a Dutch geologist with one legendary credit to his name. Years earlier, he had helped discover a massive gold deposit in Papua New Guinea, a find that made his reputation. Felderhoff brought in a Filipino geologist named Michael de Guzman to run field operations. Together, the three men set their sights on a remote stretch of jungle in Indonesia called Busong. Busong sat deep in Borneo, hundreds of miles from the nearest city, accessible mainly by boat and helicopter. Previous exploration companies had drilled there before and found little worth developing. But de Guzman had a theory nobody could easily disprove. He argued that volcanic activity had scattered gold unevenly through the surrounding rock, in a pattern standard testing methods would miss. By 1994, Bre-X was drilling test holes at Busong and reporting results to the market. The numbers kept climbing, quarter after quarter. Trace deposits became rich seams. Rich seams became, according to Bre-X's own disclosures, the largest gold discovery on Earth, an estimated 200 million ounces, worth tens of billions of dollars at the time. Investors noticed. Bre-X stock, once worth pennies on Canada's junior exchanges, split repeatedly and kept climbing regardless. By 1996, the company was valued at more than 6 billion Canadian dollars on the Toronto Stock Exchange, up from a market capitalization measured in the millions just 3 years earlier. Pension funds bought in. Retail investors mortgaged homes to buy shares. Financial analysts across North America called it the gold find of the century, and a handful of mining companies, including the major Canadian firm Placer Dome, tried and failed to negotiate their way into a stake. Nobody outside the company had independently verified a single sample. The junior mining sector Bre-X operated in was built for exactly this kind of story to spread unchecked. Junior miners are small, speculative companies that explore for deposits without the capital to develop them alone. They exist to find something promising, then sell the rights or partner with a larger firm. The entire business model depends on generating excitement around unproven ground, long before anyone extracts a single ounce. Regulators at the time required far less independent verification for these disclosures than they do now. Bre-X wasn't breaking the rules of its industry. It was exploiting exactly how loose those rules already were. None of that explains what happened next. The files do. Subscribe, because this channel covers what most people slept through. The core samples told a different story than the one investors were sold. Standard mining practice splits every drill sample in two. Half goes to the lab for testing. Half stays in storage, untouched, so outside auditors can check the results later if questions arise. De Guzman rejected that method. He argued Busong's gold was too unevenly distributed through the rock, so every sample had to be crushed and tested whole, with nothing held back. That single decision destroyed the evidence as fast as it was created. No untouched core samples survived for anyone to independently check at any point for 3 years. Later investigations found a far simpler explanation in volcanic geology. Corp records and investigative reporting from the period described the samples as salted, deliberately contaminated, with outside gold to fake the assay results that Bre-X reported to investors. Early on, according to accounts from people involved in the operation, the added gold came from something close at hand, filings from de Guzman's own wedding ring, mixed into early test samples by hand. As the operation grew and the stakes rose, Bre-X purchased alluvial gold dust from local placer miners working nearby rivers and streams, then worked it into the crushed rock before it reached the lab. It was a low-tech fraud sustained by a high-tech story. Nobody testing the samples was checking for jewelry gold. They were checking for gold, and they found it exactly where de Guzman told them to look. By 1996, Bre-X needed the fiction to survive contact with a serious, independent partner, and that meant navigating Indonesian politics. The government, under President Suharto, made sure Bre-X couldn't develop Busang alone. Suharto's son, Sigit Harjudanto, and a Suharto business associate named Bob Hazan inserted themselves into the negotiations. The deal that emerged was brokered at the highest levels of Indonesian power. Bre-X would keep a 45% stake in Busang, while the American mining giant Freeport-McMoRan would run the mine and independently verify the deposit. The agreement was announced on February 17, 1997, and briefly seemed to answer every remaining doubt in the market. Freeport-McMoRan sent in its own geologists to drill fresh, independently controlled samples, taken and tested outside Bre-X's supervision. Nobody at Bre-X could salt those. That was the official story. The samples underneath it told the truth. For years, the public story matched the stock price, and the stock price kept climbing. Financial press across Canada and the United States called Bre-X's "Find the Discovery of a Generation." Mining analysts issued buy ratings without visiting the site or independently reviewing raw drilling data, a break from standard due diligence that almost nobody flagged in real time. David Walsh became a celebrity in Calgary's investment circles, feted at industry dinners as the prospector who beat impossible odds. Bre-X shares traded across multiple Canadian exchanges and briefly cracked a major national stock index, an extraordinary run for a company that had been penny stock just a few years earlier. The Indonesian government's involvement lent the story a final layer of credibility that few outsiders questioned. If Suharto's own family wanted a piece of Busang, the reasoning went, the gold had to be real. A head of state's relatives don't attach themselves to nothing. Nobody wanted to be the analyst who called it fraud publicly and turned out wrong. Then, on March 26, 1997, Freeport-McMoRan broke the silence. Its geologists, working independently at the site, announced their own due diligence samples showed only insignificant amounts of gold. The phrase landed like a verdict. Bre-X's stock, which had opened that morning near its all-time highs, began an immediate and violent slide. Bre-X's response was denial. The company publicly disputed Freeport's findings and demanded a further, independent review before accepting the result. On April 1, 1997, Bre-X issued a statement trying to reassure shaken investors that the gold was still there, framing Freeport's numbers as a technical disagreement rather than a fatal one. Some analysts still defended the company publicly through early April, insisting the world's largest gold deposit couldn't simply vanish because one firm's samples came back light. Behind the public reassurance, the company was already unraveling. On March 19, 1997, a full week before, Freeport went public with its findings. Bre-X had quietly summoned de Guzman back to Indonesia to meet the Freeport team and answer directly for the growing discrepancies in the data. He never arrived. Nobody added up what happened to him until the jungle gave him back. On the morning of March 19, 1997, de Guzman boarded a helicopter bound for the Busang site. Partway through the flight, he fell nearly 800 feet into the jungle canopy below. His body wasn't found for 4 days. By then, animals had gotten to it, and what remained was barely identifiable by sight. Investigators used dental records and a thumbprint to confirm it was him. Indonesian police ruled the death a suicide, citing hepatitis and mounting financial pressure as motives, and noting an earlier suicide attempt in de Guzman's medical history. The ruling has never fully satisfied the public record. De Guzman's personal life was already complicated before his death. Reports later established he maintained at least 2 wives in different countries, along with multiple identities and passports. Years afterward, a Canadian newspaper reported that one of those wives claimed to have received a money order from him, dated after his reported death. No evidence has ever confirmed foul play, and no evidence has ever confirmed he survived. The theories multiplied anyway, that he faked his death and fled with hidden riches, that he was silenced to protect people above him. The official cause of death has never changed: suicide. 6 weeks after de Guzman died, the truth caught up with the company he worked for. On May 4, 1997, Strathcona Mineral Services, the independent firm brought in to settle the growing dispute, released its findings. The core samples had been salted with alluvial gold dust. There was no economically significant gold at Busong. There never had been. Bre-X stock, which had traded above $280 Canadian a share at its peak, collapsed to nearly nothing within days of the report. Trading was halted repeatedly as the price cratered. An estimated 40,000 investors lost their entire stake: pension funds, retail traders, and ordinary Canadians who had remortgaged homes to buy in. More than $6 billion in market value disappeared in a matter of weeks. Bre-X limped on in name only before formally filing for bankruptcy in 2003. Nobody was ever criminally convicted for the fraud itself. John Felderhoff, the only senior Bre-X executive to face charges, was tried for insider trading and securities violations tied to shares he sold while the stock was still climbing. The trial dragged on for years. In 2007, an Ontario court found him not guilty on every count. He lived out his remaining years in the Cayman Islands and died in 2019, having never publicly admitted responsibility for what happened at Busong. David Walsh, the man who started it all from a basement in Calgary, died of a brain aneurysm in 1998, before he ever had to answer for it in court. The company was gone. What it forced regulators to build wasn't. Before Bre-X, mining companies could publish resource estimates with almost no independent oversight. A company could claim gold in the ground, and investors had few reliable tools to check the claim before buying in. The system ran largely on reputation and trust. That changed in February 2001, when Canadian securities regulators introduced National Instrument 43-101, a rule requiring every public mineral resource estimate to be prepared or verified by an independently accountable professional known as a qualified person. The rule specifically bars companies from disclosing speculative figures without technical backing, and it makes the verifying geologist personally accountable for the accuracy of what gets published. Australia followed with its own tightened technical reporting code, known as the JORC Code. South Africa updated its own mining disclosure standards to match. Stock exchanges around the world imposed stricter listing requirements for mining companies specifically because of what happened at Busong, and those requirements remain largely unchanged today, more than 2 decades later. This is the reason a modern gold mining claim comes wrapped in technical reports, named geologists and legal liability, instead of a press release and a rising stock chart. Every time an investor reads a mining company's resource estimate today, they're reading a document that exists because 40,000 people lost everything to a fiction told through a salt shaker. The deeper lesson outlasts the regulation. Bre-X worked because of trust, not sophistication. Investors didn't independently verify volcanic gold theory or crushed core samples. Most couldn't have, even if they tried. They trusted expert geologists, a rising stock chart, and the assumption that a company connected to a sitting head of state's family had too much to lose by lying. Every one of those signals turned out to be for sale, and none of them required a single person to lie to an investor's face. The lie traveled entirely through documents, samples, and other people's confidence. Bre-X isn't an isolated case study in fraud history. It's the reference point every mining regulator still measures new disclosure rules against. When later scandals surfaced in other resource sectors, investigators and journalists reached for the same comparison almost automatically. It became shorthand for a specific kind of lie, one built entirely from technical authority, dressed up in the language of expertise that ordinary investors have no way to independently check. The gold was never in the ground at Busong. It was in the story, and for 3 years, the story was worth $6 billion. Most people slept through this. You didn't. Subscribe, because there's more.